Hello, everybody. Welcome to another episode of Just Two Dads with my partner and co-host, Mr. Shawn Francis. I am Brian Altunian, and today's episode is going to be talking about money and some specific ideas, definitions around certain things that you may have heard, and how they apply to all families, but also, and more importantly, to our caregiving families for those special needs families, and how to take advantage of some of the things that are available. So all about money, and there's more to money than just money. So here we go. Another episode of Just Two Dads. Hello, everybody. I am Brian Altunian along with Shawn Francis, and we are Just Two Dads. I want to say this is episode number 161. We've been doing this for about 3.5 years. Shawn and I were having conversations around money and finances and addressing the special needs community and the work that we do. We realized that there were a lot of service providers out there that serve the special needs community that we didn't really know much about. And we figured if we didn't know much about it, other people would be interested to find out. So for 3.5 years, 160 episodes prior, we've had some amazing guests on to talk about the work that they do for the special needs community. And today we are guestless, but Shawn and I decided to put our thoughts together and talk about things around money and finances. So before we get going, I just want to thank you if you're catching us live on Facebook. Welcome. Please leave your comments and hopefully we'll drop them on the screen. If you're catching us after the fact on our YouTube channel, welcome. Please hit subscribe and like and share the content if it's valuable to somebody that you know. If you're catching us on any of the podcast outlets or on WSTX AM radio down in the U.S. Virgin Islands, thank you for making us part of your listening day today and always. We appreciate all of you. Thank you to Sean Hall out in Hawaii for handling all of our technical duties and artwork and promotion and that type of thing. So thank you, Shawn Hall. Couldn't do this without you. And I think, if you want to reach out to us with a topic or an idea or something you'd like us to discuss or have a suggestion for a guest, we've got some great guests coming up over the next several weeks. Please send us an email at wearejusttwodads@gmail.com. Anyways, without further ado, we're going to get into this conversation today about money. And so to do that, I'm going to throw it over to my partner, my business partner and partner in Thrive, Mr. Shawn Francis. How are you today, Shawn?
I'm doing great. Ready to kind of jump right into it. So, I don't think I've seen anybody else, say this, and I haven't, I don't own the phrase, but you hear me say it all the time. There's more to money than money. There's more to money than money because, 16 years ago, I got into an industry that I thought I would want nothing to do with, which is financial services. I had been working as a sales support rep for Countrywide Home Loans, who was the largest lender in the country at the time. And I knew nothing about that industry or anything like that. It was a tremendous learning opportunity and kind of scary. But I was in an environment where people kept getting promoted based on, a lot of it seemed to be who they knew, just as, if not more than what they knew. And we would have these monthly celebrations where people would you get like a baked good or a movie ticket, like for your birthday and that kind of thing. And then they would talk about how many billions of dollars worth of loans had been funded in the division, not within the company, that given month. And I saw all kind of people making money and all kinds of stuff. And my now wife and I had been together for a couple of years, but we weren't married. And I went through all the challenges and I kind of topped out, and I was like, I got to start looking. And the company was so big that you could look for opportunity within the company. So I did that, had my resume outside on the open market as well. And they're now a dinosaur, but monster.com. I was about to say Monsters Inc. That's to let you know how much time has changed. Monster.com, hot jobs and things like that. And I kept getting responses as being a financial advisor. And I'm more of a creative person by nature. So I kept thinking, ugh. But what I liked about it, eventually I thought, well, my job was to bring people together. That's what might lend itself to that. And Eventually our son Elijah was born, and I also wanted some flexibility. I wanted to earn more money, and I found a platform that allowed me to do just that, but at the same time serve people that were otherwise left behind. And
Yep.
I kept hearing the term accredited investor, and several things lead into what we're going to talk about today. I kept thinking, financial services, provide financial services. Well, over time, I realized that financial services and education and literacy just happen to be one of the tools or one of the bricks with which you use a bridge to build a life to build a bridge between the life that people have and the one that they want. And it's not about the money. It's about what money allows us to do. People are the most important thing on the planet, and money gives us options to spend more time with the people that we love. So that's where the idea of there's more to money than money. So I kept hearing about accredited investors. I kind of knew what that was, but you and I have been talking about how that definition is going to change. And, when it comes down to any community that is underserved and overlooked, anything that is important to the general population is twice as important to that community. So that's why we're going to start with that today. And so we're going to get you going here and talk about what an accredited investor is, what the definition is, and what that will change. And because in the area in which we work, we're able to serve people from a bunch of different walks of life. The industry has traditionally I shouldn't say only serve, but reserve some of the greatest opportunity for accredited investors. And so when you think about equality and inclusion in and outside of money, anything that is more inclusive is always something that catches the eye and intrigues people. But, there's also something to be said for making sure that the right people are in the right thing, not that the right people have access to it. So we'll start with a bunch of that. So to begin with, why don't you kind of let everybody know what an accredited investor is? Or let me start by saying this. According to Investopedia, it's a person who must have $1 million in net worth, more than $200,000 in earned income in the past 2 calendar years, with the expectation of the same earnings to continue. Now, the common thought is that people that meet that criteria then have access to investments that will get a higher rate of return. So they're having access to some of the better things. And I heard on a podcast, just this past week, that there are people who are well-to-do, some of them that we know, that were making millions before they had access to these products and opportunities. So you're talking about a very strong gatekeeper mentality, but you kind of gave me some nuance and clarity on those things. And when you think about it as well, if you open those things up to just any and everyone without education and some kind of nuance, there's challenges there too. So let's go ahead and talk about that.
Yeah. So first of all, there's a rule written into the definition of accredited investors that allows the SEC to review the definition every 4 years. So every 4 years. So you're talking about some changes that have been commented on because a potential rule change is, kicked around on December 15th of 2023, but there was a rule change back in 2020 as well. And prior to that, even then. So they're constantly reviewing and evaluating what the definition of an accredited investor is. And so that's just, first of all, so it's not like, it's not like, oh, there's some new changes that are coming and, we've never had this before. Changes happen every 4 years to that definition. Second of all, an accredited investor is the idea behind it is it's talking about somebody who has a little bit of sophistication when it comes to certain kinds of investments. So, most folks, in fact, in our industry of, financial services, a lot of times we'll say, when people ask, what do you do? I say, I'm in financial services. And then I often hear people go, well, I don't have enough money to invest. I'm like, okay, well, good. I'm sorry. And that's like this, a tiny portion of what it is that we do. But for a person who doesn't have money to invest, like in the stock market or, in other arenas, they probably don't qualify as an accredited investor, somebody who has had some exposure to or some sophistication around investment and investment opportunities. So what it is defined is to find us as somebody who has that sophistication as a means of protecting the average consumer. So people aren't just cold calling, folks, or doing a general solicitation to get people to invest in their next cool idea, and have somebody whose idea of getting rich is playing the lottery every, Monday, Tuesday, whatever the days are, Fridays, Saturday, to prevent those folks from getting into an investment that they may not really be prepared to handle or understand. So an accredited investor really is talking about a level of sophistication. So initially the idea was that there was a threshold around your assets and or your earnings that puts you in a position to have a little bit more sophistication. So if you're making over $200,000 as an individual, over $300,000 as a couple, chances are that you are looking at things beyond just a 401k. You're looking at other kinds of places to put your money, investments that, where your goal is to grow your wealth, because your 300,000 a year as a couple, depending on where you live, it's more than enough to cover your basic expenses and give you a chance to put away for growing your assets, whether you're acquiring real estate or you're, acquiring stock in the stock market or whatever. So there was an income threshold. And by the way, you to qualify as an accredited investor, you just have to have one of these. Another criteria is having a net worth of $1 million, but that doesn't include your value of your home. So $1 million in assets that you own outside of your family home. Again, if you've acquired, if you've acquired real estate or you've acquired assets, maybe stocks or other kinds of investments, then you've had some exposure. There's other institutional definitions, like if you're a bank or you're a private equity firm or you're somebody or you're a business development company where you're in the actual business of providing capital to individuals or companies, then it qualifies. And there are a few other definitions of what it means to be an accredited investor, but the idea is that you have access to, or you're exposed to some alternative forms of investments that give you a different level of sophistication around making investments. So
excellent.
I know feels like you have a question, because I have more to add, but you have a question to that.
Yeah. What I want to do is I want to, not so much as a question, but a comment to anybody that's listening. And okay, they're talking about business, they're talking about money, they're talking about, keep in mind. So here's the other thing I meant to mention. So what we decided to do is a series of episodes. This is the first of several of them. And the series is called There's More to Money Than Money. So if you're listening and you're thinking, oh, they're talking about information for wealthy people, or they're talking about money, what we're really talking about is, if you think about it, life, liberty, and the pursuit of happiness, right? That's something that comes along or was created with the idea that all men are created equal, even though they didn't say women, right? Which they should have, but all human beings, everyone's created equal. Everyone has the right to be happy and fulfilled. Money is just a portion of that. And so the real conversation here is around changing the mindset about money, because everybody has a right to prosper, right? And if you're in a community that is underserved, you've got a little bit more of a challenge, in some ways, because depending on the diagnosis and the situation that you're dealing with as a caregiver or parent to one who's neurodivergent or has special needs or maybe elderly, it may be kind of tough to focus on, anything beyond getting through the day. But this stuff is no less important to us than it is to anybody else. And I don't care how much you make, because there's several things to remember. No matter how much or how little you make, the government has a plan for your money if you don't have a plan for it. Doesn't matter how you vote, doesn't matter who's in office. And so all these things that we're talking about, we're trying to actually change the way people think about, money. I think you would say the same thing, Brian, that I could probably speak for both of us when I say that to an extent. It's like money isn't necessarily I don't know if it's important to us, but having it accounted for, having more of it than one might need, putting you in a position to share with others and empower people and give yourself choices and that kind of thing. We'd like to have that for that purpose. So as you start to think about what you really want out of life, the more that you have, the more you can give, and the easier it is to get there. So I just want to what's the word I'm looking for? Encourage you to change the way you might think about it. Think about what money as the fuel more so than anything else. So I'm probably entering the rambling stage at this point, but I just wanted to make sure that our listeners, take that into consideration as we talk about these things going forward.
Yeah, no, I think that was worthwhile. That was a worthwhile conversation. I was going to say just going back to the notion of accredited investors. There's a couple of things where it comes into play. First of all, let me talk about the new expansion to the definition that is being it's being covered right now, is to add anybody who works for a firm or a bank or like a private equity firm or a venture capital fund, or works for a business development company, somebody who is in a position to look at, analyze, and evaluate potential investments. The new definition is been included to, expanded to include those folks as well. The other thing is, think about this. I mean, I'm sure in this era of, crypto and, Bitcoin gone wild and Bitcoin ETFs and all that stuff, many people who have no idea what crypto is or how it works, told by a friend to, buy money in Bitcoin, buy ETH, Ethereum, buy Dogecoin, or buy, all of these, that's happened a lot over the last 5 years, or even those sort of like the unicorn grabs, like AMC and, some of the things that exploded on the trading boards, like message boards. A lot of people read that and they just go like, oh, I'm just going to invest in that because that seems to be the wave, without having full understanding of really how those investments work, how they get their money out. And in fact, some of the biggest issues that we've had with Bitcoin, NFTs, and a lot of this digital currency and digital, I'll just leave it at that, digital currency, whether that's cash replacement or art or whatever. The issue is that there's a level of sophistication that goes into the creation of those, and that the average person, to really understand what that looks like, really has to know the nuance, what's behind blockchain and all the components that go in the technology behind cryptocurrency. And the exposure to that industry happened because there was a lot of fraud, theft, a lot of stuff that would not have passed in the United States, the SEC, so the Securities and Exchange Commission, would not have passed their scrutiny. In part, it was part of the intent was to not have it be controlled by governments, but to have it be sort of a closed end system where all the participants were knowledgeable, and it was kept fairly closed. And right now, people don't really understand how currency in their own country works. They don't understand what it means, the value of a dollar and those type of things. And crypto was showing that, when currency is controlled by a government, you as the general public are susceptible to the whims of the government's fiscal policy. And again, whether you're Republican or Democrat, that shifts. And we've had, where we've shifted back and forth between parties, and fiscal policy has changed in this country as well. So the idea behind cryptocurrency was to decentralize the currency and have it be, used by the participants and not controlled by the government, who political wins may impact fiscal impact, right? Fiscal value. If you remember that the last administration was complaining about China devaluing their yuan, their currency, in order to gain an upper hand in global trade. Governments control that. And by the way, during the pandemic, our government printed trillions of dollars backed by nothing, right? It used to be backed by the gold standard, by gold, the value of gold. And there was a limitation. And then our fiscal policy, like a balloon, was fairly controlled. It was like a balloon where you control the air inside the balloon. By printing all this money, stimulus package and whatnot, no longer underwritten by the gold standard, anything can happen, right? We just added trillions of dollars of fake dollars into the system, backed by nothing, which means that the value, the purchasing power of our dollar has gone down. Combined with inflation, increase in interest rates. Now you can see why we've got, some major financial problems in this country. And most folks, unless they've taken an econ class or unless they understand economics, don't really understand that. So when it comes to investing in cryptocurrency, a lot of people, took a second out on their house, or, they took an early penalty on their retirement to take cash and invest it in crypto and have that be wiped out. And so what the government does by calling out for accredited investors is to try to prevent that kind of stuff from happening. If you've got some level of sophistication, you understand how to review, analyze, and look at the nuances of an investment and not be built or, talked into something that you have no understanding of. That's
Let me ask you
in general. Yeah.
Let me ask you this and play a little devil's advocate. So it's easy to think, the whole notion of the rich get rich, the poor get poor. Any example of that is easily consumed. And, it's easy for one to think, oh, the man's out to get me. And, and I think a lot of these things contribute to the negative association that people have with wealth, generally speaking, but again, in a marginalized or overlooked society. So there are those that will, obviously say, accredited investors. So they get higher rates of return and they're just keeping that from us. That's easy to say.
By the way, obviously, let me just correct you. Let me just correct you with that. Accredited investors don't get a higher rate of return than an average investor. No. I'm talking about the notion, because they get access to things that give a higher return. That's not to imply that if you're an accredited, if two people have access to an investment, one is an accredited investor, the other is not. The accredited investor isn't going to get the higher rate of return just because that's who he is. But the notion is that the accredited investor has access to the product or vehicle or investment, which gives a higher rate of return than that which would not. And so my question to you is, if you could explain to everybody, well, what is the benefit of, just what I said, talk about that and what that benefit is then. What does this mean? What is the good thing about but the definition being broadened? But so a couple of things just to keep in mind. An accredited investor who invests in something that is fairly sophisticated has an opportunity to get good rates of return, but they take on a massive amount of risk. There are no investments available to an accredited investor that don't come without risk. And in fact, just so you know, and I've been involved in a number of companies that raise money from the public to take companies public, and with a private placement memorandum. So that's an example of a document that is a company wants to raise money from the public and they use a private placement memorandum. And I will tell you, if that memorandum has 50 pages, 45 of those pages are all of the risk factors associated with that investment. It's crazy. It's sort of like a CYA, cover your butt, disclosures in a memorandum. Things like the economy could, there could be things going on in the Middle East that we have no control over, and it could, ruin our ability to be successful. The economy could go bad. We could have competitors that we don't know about that could make this investment a bad choice. The value of our dollar could go down and make the investment bad choice. Like all of these things that are like, these are all the reasons why you probably should not, because there's a lot of risk involved with this. And then after you finish the 45 pages, it says, okay, so now if you're ready to make the investment, knowing all of that, here's the form to fill out. Here's where to send your check.
Go ahead. I got a question for you, but go ahead.
Okay, good. So keep that in mind. So remember that the investments that are available to accredited investors have a good chance of a high rate of return, but have a better chance of a higher rate of risk. And that's what the protection is for, is to prevent the average person who's just, trying to save money for their retirement, put their kids through college, they're trying to protect those folks from massive amounts of risk.
Mhm.
Go ahead with your
So
question.
let me ask you this. So I'm glad you mentioned private placement, because that's essentially what it is that you have access to. And that's the wording I was looking for
Among
when I was
others,
talking
there
about.
are other things, but
Among,
yes, that's a
right.
that's a common one, very common.
Is it easier said than done to simply provide education and some kind of certification and then an acknowledgement that would allow maybe not just the average person or everyone, but provided that a person meets certain criteria in terms of assessing their own risk or having assistance in assessing that risk? Is it easier said than done to have a program in place that gives someone that, so that there's some increased chance, no matter how great or small, that prosperity is more evenly spread across the board, or shot at prosperity, I should say?
In an ideal world, yes. But I will tell you this. If I gave you a 50-page private placement memorandum with an opportunity to invest in a company that's in AI, for example, and I'm raising money and the money is closing fast, how much of that 50-page report are you going to read before you make the investment?
Well, put it this way. If I have the funds to do it and it's that big a decision, me personally, I'm going to read all 50 of them and I'm going to make a well-informed decision, because if there's a chance that it can really do something, I'm going to read it all and I'm going to give great consideration to how much, if any, I choose to invest.
Yeah. So I'm just going to tell you now, you're probably in the top half. You represent about a 0.5% of people that get
Really
private placement memorandums in the mail. By the way, if you invest in the stock market, or even if you have a mutual fund, you probably get proxy statements in the mail.
Right.
Right. Or annual reports. How often do you read them? Do you read those? Most people throw them away. Most people don't even read them.
I have read them. Do I read them all the time? No.
And you're in the financial services business. So by the way, let me just also say this. Another added definition is if you have licenses. So if you had your certified financial planner's certificate, if you had a Series 6, 63, 65, 7, any of the securities licenses, and you didn't have 200,000 income, didn't have $1 million, that your license qualifies you to be an accredited investor, just to let you know, because you've done education around investment products. Okay. So that's exactly that. Yes. The answer to your question is, can be more education be done? Absolutely. Go get a certification and get your MBA, get a certification in investments, get your securities licenses. But how many people actually do it? Right? Not a lot.
Yeah.
Not a lot of people even read the memorandums or the prospectus or the proxy statements that are given. And so opportunity is always there, Shawn. And by the way, if you have a private placement, generally your private placement document is going to come with a couple of things: a business plan that lays out the company's plan for execution, and an attestation questionnaire. So basically, the onus is on the individual investor to check off those things that make them sophisticated, right? They go through the list. It's 3 or 4 pages of that 50-page document that I'm referring to that says, this is my experience in stocks and bonds and mutual funds and private placements and, real estate and all. This is my experience. 0, 1 to 10 years, 10 plus
just
years.
Like we have on applications for annuities and in some cases even life insurance, depending on the state and stuff like that. That takes me to something which we're trying to do, and it's so important to me that I feel like it would mean the world to me if I felt like I was getting through to somebody, which is demystifying money. Again, there's more to money than money. And what that means is, like, there's a gift in taking responsibility for ourselves. I saw an interview the other day with the gentleman. I cannot think of his name, is because Price Pritchett. He was with Lewis House, and he made a statement to Lewis, and he has a book called U Squared, which is a fantastic book on personal development. It's super thin, but he made a comment where he said, you are the most powerful person in your life. Like, do you realize that? And what I did is, rather than think that was a great statement and I posted the question on my social media platforms. Who would you say is the most powerful person in your life? And some people said God. Some people said my mother. Nobody said their father. A small amount of people said me. And what I said was, again, not to judge anybody, I just simply said, think of what you might get from the notion that it is in fact you. Would you want your child to be the most powerful person in their life, as a parent, right? Or would you want to be the most powerful person in their life? And at the end of the day, if we choose to be, we are. So when you talk about what most people will and won't do, I think that's super valuable, because everything comes down to our choices and everything. And the greater responsibility we take, the more likelihood that we're going to be successful in anything, generally speaking. But again, like everything else, anything that affects the general population affects our community 10 times.
Well, the benefit that our community has is, once we get past that initial state of, the diagnosis and the psychological, mental, and emotional, hurdles that we've overcome, most people in our community aren't satisfied with just an answer handed to them, whether it's by a doctor or somebody who's assessing the child, and they want to know more. I never heard the term microcephaly before my daughter was diagnosed with microcephaly. And what did I do? I dug in. What does it mean? What does it include? What's the impact? What's the long-term impact? All of that stuff. Our community is much more sophisticated when it comes to healthcare than, I would say, the general population, because we've been exposed to something that is not generally well known, and we have to do research to know how to advocate and allow our children to self-advocate and make sure that our families are taken care of. So in some cases, our community is much more sophisticated than the general public. When it comes to finances, because of that aptitude, our community could be best served by, putting their money in places where they've got an opportunity to have great growth, because they understand the risks. You understand, if your child's been diagnosed with something and the school still mandates a vaccine, I know we're not really supposed to talk about that, but I'm just saying, like, the research into those kinds of things, we're very, very forward thinking when it comes to a lot of that stuff, whether it's diagnoses or whatever it is, challenges, a lot of change in the world of around disabilities has come from a parent saying, my child cannot get up these stairs in his wheelchair. You have to have a ramp.
Right.
And the ADA eventually required ramps in all public buildings because a parent was not willing to just accept the status quo.
Right.
So, by the way, it takes one person or somebody to start the movement, and then government puts those requirements in place to make sure that everybody is served. The definition of an accredited investor is exactly the same thing. It's just on the financial side, just to make sure that one person whose grandparent, they liquidated all of their holdings to put in some investment and lost everything, that somebody went, hey, there's got to be some protections for the general public around investments that sound good, but they don't know that people don't really know much about it, and they're just taking somebody else's word for it by things like implementation of a fiduciary rule, where anybody who's recommending certain things acts as a fiduciary in the best interest of their clients, that type of thing. The rule of being a fiduciary or having fiduciary responsibility, and the requirement to have a prospectus, the requirement to have a lot of things when it comes to investments. Those requirements exist because somebody lost an opportunity or lost something because they weren't properly protected. And rather than let just, people act willy-nilly when it comes to serving the public, the government's role is to protect the unprotected, right? Those who are already in the protected class get protected as well, but those who are not in that protected class get some protections. And so that's where that accredited investment concept comes from. So anyways, sorry, that was
no, not at all. No, that makes all the sense in the world. And it's interesting too, because, if you think about it, um, everything goes it goes both ways in terms of having the information and the protection, and then at the same time having the opportunity as well. And you know, for most of us, like we've been having conversations in our group, which we always talk about on the show, our men's group, um, uh, the den. When you're a caregiver, especially if your challenge and your we've had conversations around how it affects stress levels, how it affects our aging, and how it even affects life expectancy. And I mentioned before that I've seen articles when I just Googled it that will say that the life expectancy of a caregiver is reduced because they're a caregiver. And then there's also studies by equally credible sources that will say that the life expectancy is increased because they're a caregiver. So each situation is different. And I think that, when it comes to, financial vehicles and things of that sort, it's twice as important, again, for us to be able to have access to things, and what each person does with it is completely, up exactly, up to them, and those things carry out, a whole lot of weight when it comes to us. Tell me this then, what would you say, um, would be the benefit of and it might be obvious, but what would be the benefit of the definition of accredited investor being broadened, especially as it relates to our community?
Well, again, it's not going to be broadened to include the entire general public. Otherwise, there'd be no reason to have an accredited investor
Right.
requirement.
Right.
It's not. It's not. The expansion, again, is some sort of proof of education and knowledge, And again, that's been going back to certificates and licenses and that type of thing.
Right.
For those people who are interested in doing it, they should explore, getting some, whether it's a, accredited university, and accredited, another word there, it's the same word, different usage, but, getting some education that provides you with, a better understanding in general about how these things work. Most people don't know how the stock market works. Most people don't know how the stock market works relative to the bond market. Most people don't even know what a bond is. Like, just some basics around finances,
Yeah.
and I always tell people, like, we spent a lot of time in financial education. And just since I brought that up, I'll just really quickly, I would say, if you look at your personal financial situation, when you've got a lot of cash coming in, you don't use your credit cards, right? You don't use debt. You use your cash. Cash is an asset like equity. When cash is low and you don't have a lot of cash to maintain your cash
Credit's
flow,
high.
you use a credit card. You use your debt. So bonds are debt, and cash is equity is an asset, right? And they haven't generally have an inverse relationship. So a lot of times, what a bond is a when somebody is selling bonds, like you've heard the term municipal bonds and you've heard the term corporate bonds. So municipal bonds are generally government requests to borrow money for some sort of improvement. You'll see a school bond, or a bond for a hospital, or repaving of roads, or a new highway, or the new bullet train from Los Angeles to Las Vegas, right? Or Los Angeles to San Francisco. That construction project is paid for by a bond. And because it's a government bond, generally the idea is you're going to get paid back. It may take a while for that money to get paid back, but it's almost like a guaranteed. You're loaning the government money when you buy a bond. You pay cash, you give them your money, you have a bond. That bond pays you interest, right? So a municipal bond is a municipality borrowing money for some project. A corporate bond is a bond that a corporation puts out that is again, rather they could go to the bank and borrow money, or they could do a corporate bond, offer a bond to investors. Investors buy those bonds, and there's a percentage payoff. It's like they call it a coupon. It's a payoff over time because you've lent money to that corporation by buying their bonds. So it's basically debt, right? And so when equities are down and the market is down and equities are low, bonds tend to go up in value because they have to, they need access to cash. When the market's good, bond prices tend to go down because they don't need to borrow as much because they've got a lot of equity, a lot of cash in the value of their stock. So just a general, I mean, that's a very, very, very general comparison for people to understand the difference between stocks and bonds. But just that basic understanding could change a person's entire perspective on investments, right?
Right.
That's a minor, tiny, like of all the things in the world of finance, that's a small piece, but an example. So getting educated in our community, getting educated around finances and having some sort of certificate or license that gives you that is fitting within the accredited investor definition. And that is what should happen. And again, I will tell you, being an accredited investor allows you to invest in IPO stock, in private placements of companies that are looking to raise money, in secondary offerings, in certain offerings that established brokerages like your Morgan Stanley, Merrill Lynch, JP Morgan, that they offer to their investors who have fit that accredited qualification.
Now, let me ask you this. You mentioned an IPO, an initial public offering. So for the average person who's listening, benefit of the audience, and they hear about this hot company that they've known about for a handful of years. It's been privately, it hasn't not been publicly traded, but it changes lives or whatever. Well, this isn't the best example because I don't think it's life-changing, so I didn't jump on it. But I remember having a discussion 20 years ago with some friends about they loved Krispy Kreme donuts. And so when they were about to go public, they're like, I got to get into that. And I remember thinking, which is a good rule of thumb, which is like, we're a licensed individual, so we can't necessarily make investment recommendations. But there's one thing to think about: owning where you spend, right? In other words, if you're big on Apple products, then find out the risk involved with owning some Apple stock. But the question to you is like, let's say there's a great company. Let's say Apple is not what it is, but you've got the phone or you got the computer, whatever it is, you really love it. It's the initial public offering takes place in, like 30 days from now. Can the average person not decide, I'm going to put some money together and go, invest in Apple? When you mentioned the IPO.
So just to help answer that question, I'll explain really, really briefly how a traditional IPO is done. A company decides they want to raise money for whatever reason. And by the way, they should have a specific reason for going public. And we can talk about that in a second if we have time. And then what they do is they take their overall, their structure, their equity structure that's already established, founders, initial investors, investment groups, all already shareholders in a private company, and they take that capitalization table, that cap table that represents all the stock being held by all the shareholders, including employees if they have a stock option plan and things like that. They take that and they decide, I'm going to raise 10% of the value of the company by selling 10% to the public. And what they do with that is they hire a bank, a Merrill Lynch, a Morgan Stanley, a JP Morgan, and they give that 10% of shares to the bank. And sometimes it's more than one bank. Airbnb, Google, Apple, you mentioned, Microsoft, all these companies, all these tech companies, NVIDIA, which is an AI chip manufacturing company. All of those companies, what happens is depending on how big the offering is and how excited the public can get about the products, then the bank or banks then split up that 10% of stock and they offer it to shareholders. Now, generally, who do they offer it to? To answer your question, Shawn, your question is, can the general public do it? Well, 99.9% of the time, no. The average public does not get access to IPO shares before a company goes public. Generally, who gets it are CEOs, COOs of already public companies.
The definition of private placement. So they get it. In other words, they get a taste before the public does.
No. Okay. The block of shares available. So that's different. The block of shares that are going to go out on the market in an IPO, that block is generally, like, again, let's say a company's got 1 million shares and Merrill Lynch has 500,000 shares. Merrill Lynch says to its own clients, hey guys, we have 500,000 shares. We're going to price it about $10 a share. We think it's going to go out of the market at $20 a share, double your money. How many shares do you want? That's not private placement. They've already syndicated. They already own. Merrill has that stock on their books.
Right.
It's their job to sell it, kind of like a real estate broker, right? When you're given a listing, you've got the property. Your job is to go out and sell it. Same with stock. They give it to the bank. Your job is to go out and sell it. They then sell it to their clients. Their clients that generally have high net worth, are accredited investors, and have, over $1 million in value, a couple $100,000 in annual income, all that stuff,
Income,
all those definitions that they're already done. That's generally who gets access to pre-IPO shares. That's not a private placement. Private placement occurred before a bank was involved. They did it private. The company sold it privately to individuals, people that they knew, right? Or funds, or private equity firms, or venture capitalist firms. And then those firms, hedge funds, and then those firms push the company to go public so that their price, they generally got it at a lower price than that $10, whatever, so that they get some upside, right? So sometimes a company goes public because their prior shareholders are insisting on an exit. And so they force them to do it. Sometimes it doesn't make a lot of sense. I don't know if how Krispy Kreme's IPO actually went. I will tell you, NVIDIA. Go ahead. Did you?
I was just going to say, I don't know either. I didn't follow it, and I think that's kind of an indication to follow what interests you.
For sure.
Like I said, where you spend your money. I didn't follow, but I know that the ones that are open, have done well. So I imagine that it performed okay.
Yeah. So generally, what will happen is the stock is generally priced by the company or the bank at a reasonable value, but their anticipation is that the value of the company overall is going to go up. And remember, a company's only shaving off a small percentage of its stock. They're not giving away 180% of the company. They generally give away, 1 to 10%, maybe 15% of the company to the public. So the rest is still held by insiders and institutions.
Let me ask you this.
So the average person just doesn't get access to IPOs unless they know somebody at the bank, or they know somebody at a fund, or somebody bought a chunk from Merrill Lynch and they offer it up to their friends. But
to an individual.
General public doesn't get access to it. And we'll talk about Google in just a second, but go ahead. You have a question.
Yeah. I was going to say there are usually assume and associate, the biggest, most profitable companies with an IPO. However, there are large companies, well-known companies that are not and never do go public. Why might one not do that? And I guess then the question is, if you and I had a huge corporation today that was big enough to justify an IPO, it's obvious to me why you would go public and take that risk in terms of having your responsibility to shareholders and all that kind of stuff. The reason you would take that risk is because you want a shot at the upside because of the value that will take place as those shares are sold. However, then other than minimizing the risk, why would one with a sizable, well-known company have it remain private? Excuse me.
Well, a couple of things. Okay, I'll try to answer. There's two different questions in there, right?
Yeah.
And I mentioned this before. It's always important for an investor to understand, why is the company going public? I remember there's a place where our kids could go play in a play structure in a mall. It was called Giggles and Hugs. And Giggles and Hugs offered food to the family, so the parent could take their kid. They could play on these big, sophisticated, play structures, and parents could have lunch. It was a great place for respite. Made a lot of sense. The reason why they went public is they wanted capital to open up Giggles and Hugs locations all over the country. And so they needed cash in order to do that. So they could sign leases and do that, right? Because sometimes you have to have an outlay of capital in order to establish business. So expansion capital is always a good reason to go public. There's a lot of other, you can use your stock as currency if you're going to go on a massive acquisition thing and, use your stock to buy other companies. You'll see a lot of companies that buy other companies. Amazon bought Zappos, that was worth almost $1 billion, but very little cash, mostly Amazon stock. They use stock as a currency. That's another good reason. They're going to go and acquire to expand the business. That's another good reason. Some companies don't want to go public because when you go public, every agreement you have, every contract, it's all material agreement. Yep. You open it up to everybody, including your competitors.
Yeah.
A lot of the film studios are public entities, the Disneys, but they have a sophisticated corporate structure that you will never see a contract like a studio contract for a film, because they don't want that stuff in the public market. They don't want rates revealed. They don't want accounting stuff revealed. They don't want their competitors to know anything, right? So some companies will stay private because they think the upside is a potential acquisition, somebody else just buying them outright, and not have to deal with the compliance, to your point, the disclosure issues, the filing requirements, all of the stuff that's required to be a public company. Sometimes it's more nuisance than it's worth. I will say there's always, generally, you get a good premium for the value of your company. But listen, if I have a company and I say, hey, I think the company's worth $100 million, and I go public and my stock price shows it only worth $10 million, I can't say it's worth 100 million anymore because the market's dictating my value. Some companies will stay private because they don't want to have that exposure either. So
yeah,
hopefully I answered both of those questions for you.
No, you did. And as usual, this time has flown by.
So much to talk about.
Yeah, so much, and just to let everybody know, one of the next things that we're going to be talking about in this series, and I'm going to do something here that we don't usually do. I usually don't say something that Brian doesn't know is coming, but I think he's going to agree though, which is, and I don't know when this is going to take place, because in between our guests, we're going to continue this series as much as we think we've touched on the subject. But I think one of the other things that we're going to consider doing is, the gig economy, how it has redefined the way that we work, especially coming out of the pandemic. And a lot of these things that we've talked about here today touch on higher level corporations, multi-million-dollar entities, and all that kind of stuff. But when you talk about you as an individual, not on a 1099, but a W-2, whether you start, other way around, not a W-2, but a 1099, whether you incorporate with an LLC or you're just simply an entity unto yourself, those things come into play with us as well, because it's tough for some of us to just go out and get JOBs as well, because the flexibility when it comes to therapy, being able to pick your child up from school, especially if you're a single parent, depending on what your situation is, all of these things matter. So don't allow the money conversation to intimidate you and think that it doesn't apply to you, because it does. We all deserve the right to pursue happiness and give value to other people. And if we can,
for sure,
earn satisfaction and dollars from giving that value. So with that said, I was just going to say, especially because of the things that I know that you've gone through, that we have both gone through over the last 6 to 12 months, I'm going to make an exception to the rule where I wouldn't ordinarily ask you the question that we ask of guests, but I think it's worthwhile because I think you've got an answer in you that you might not even realize, which is, our ability to change the world, again, is based on our ability or willingness to change ourselves. Give one example of a belief that you've once held dearly and believed strongly, but just no longer believe to be true. And I'll answer it after you, so you're not alone.
Yeah, it's fine. I listen, as a dad, as a father, a partner, and I think this is common. I kind of felt like the responsibility for, taking care of other people falls solely on my shoulders. And that causes so much stress and anxiety. Doesn't give me the room to mourn, to struggle, to be vulnerable, to be. And so I realized that by letting go of some of that and letting other people find their own way, and whether they're stumbling through it or they're just finding a way to solve a problem that doesn't require my support, I kind of feel like that's a healthier place to be. I thought that I needed to do everything, and I can't. I can't do it all anymore. So that's a big change for me.
Good. I was going to say, I've got a couple of them, but I saw a post from a friend that I reposted, And it brought me back to the realization that, again, I am the most powerful person in my life, much more so than I ever realized. The fact that we get to choose, the fact that we can control our thoughts is as undervalued, underestimated as it is valuable. And so there's this quote from a gentleman by the name of Charles Bukowski, which says, "And when nobody wakes you up in the morning, when nobody waits for you at night, and when you can do whatever you want, what do you call it? Freedom or loneliness?" And what's so interesting is that perspective is truth, not always the truth, but our truth. So the answer to that question is, if you're a person who has lived life defined by your titles, be it husband, wife, mother, daughter, friend, sister, lover, whatever the case, and you have a less than conscious relationship with yourself, the answer to that is probably freedom. If you're someone that has a very good relationship with yourself, but you've never experienced a love that celebrates who you are, who you want to become, and things of that sort, then the answer is probably loneliness. And so what I've arrived at, it's all my way of saying that, I understood we get to choose. We get to take responsibility. But I've accepted it at the highest level possible. I shouldn't say the highest level possible, higher level than I ever have before. So in interactions, whether it's my wife, a friend, a family member, whoever, I've also done away with the feeling that, you know what, you made me feel so-and-so. People don't make us feel so any given way. I get to choose. So one of my mantras now is, I get to choose. I get to choose. If someone is completely disrespectful in some way, shape, or form, you have to let them know, because you got to stand up for yourself, and you don't know their level of consciousness and what, how aware they are of what they've said. But at the end of the day, you still get to choose. Now, does that mean that I'm Captain Namaste all the time? No, not at all. So it's a work in progress, but
listen,
that's where I'm at.
Mm-hmm. I remember, a great lecture given to a young princess, princess of Genovia, where her valet said to her, nobody can make you feel a certain way without your permission.
There you go.
There it is. So
we're teaching all the time.
Yeah. Hey, let me just say one last thing just really quick on the finance thing. Last thing. When is it not a good idea for a company to go public, right? Or what happens when a company goes public? Or is it all automatically always a win? Watch the movie We Crashed about WeWork. Look back at Global Crossing and MCI Telecom and Countrywide, mortgages and Enron. And there are more and more, and look at Bernie Madoff. There are more and more examples of companies that crashed and burned for a whole bunch of reasons, not all the same, whole bunch of reasons. Going public or IPO or having access to an IPO doesn't always guarantee. People who bought Facebook stock at the very beginning lost money if they expected to sell within the first 3 months. The stock market, gave them a beating. Anyways, Google made their stock, a portion of their stock, available to people if they qualified for a lottery. That didn't always go very well either. Very few people got access to it, and so that hasn't been solved. So, anyways. Just wrapping it up on accredited investors. I know we're wrapping up. We're coming to the end of our hour. Love spending this time. We want to talk about Billy Footwear. Always, great sponsor for us. Billy Footwear, adaptive footwear. Check out the story of Billy Price, their CEO. Check out our den, the den, which we do every other week. Shawn guides and drives the conversation. Dads, it's a safe place for dads who are caregivers to talk about the things that are current issues that we're discussing. Things like we've been talking about, what if our child doesn't want to get a haircut, and those types of things. The den is a safe place to come, and we do it every other week on Zoom, free to join. So consider clicking on the button there to register. Also, again, we are just2dads@gmail.com. Like our stuff, subscribe on our YouTube channel. Please leave comments. And let us know. By the way, if you have questions about any of the stuff that we discussed today, let us know. Reach out to us and let us know if you want some clarification, or if you're curious about any of the things that we've talked about here. Please let us know. And then as we sign off, last thing I'll say, and then I'll throw it over to you, Shawn. is,
Mhm.
as I say, I just got a chance to talk to my daughter Jordan, who's volunteering in Tel Aviv. She got a chance to talk to somebody from the IDF and meet some hostages. And so empathy and love now more than ever. Be empathetic about somebody's situation. You have no idea what they're going through, and look at the world through the lenses of love. The world is such a beautiful place when you can look at it that way. So with that, I'm going to throw
Most
it to you, and
definitely.
thank you everybody for tuning in to Just Two Dads.
I just want to thank everyone. I'm so grateful for the platform that we have here and the opportunity to add value to other people. And for those that tune in, again, like Brian said, like and subscribe, whether you're following us on YouTube, wherever the case might be. Keep your eyes posted. We'll get a date for you as well. We're going to be doing our summit. We did one, I think it was like 2 years ago. We had a handful of people that included nutritionists, therapists, attorneys that deal with estate plans and special needs trust, as well as education attorneys, and our good friend Susanna Peace-Lavelle, who is a life coach for special needs families. We're going to be
And author.
doing
Now
an author now. That's right. We're going to be doing our next one towards the end of March, just before Autism Awareness Month. As soon as we have that date, which we hope to have nailed down within the next week, we will let you know and encourage you to save that date. And wherever you are, remember that questions are more powerful than statements. We should try and strive to be more childlike, less childish. Don't ever let that child that's inside of you die. And remember that everybody needs to be loved. Everybody needs to be heard and seen. And wherever you are within the sound of our voice, and again, thanks to our producer, Sean Hall, out in Hawaii, wherever you are within the sound of our voice, we love you. Thank you.
Bye, everybody.